All right, hello and welcome to the Yet Another Value podcast. I'm your host, Andrew Walker, and with me today, I'm excited to have my friend Alex Morris. Alex is the founder of The Science of Hitting. I guess it's thescienceofhitting.substack.com now. We'll get to that in a second. But Alex, how's it going?
It's going good. Thanks for having me. I'm excited for this.
Hey, I'm really excited for this too. I think about 18 months ago, I came on your podcast and did cable stock. So I'm excited you can return the favor. Let me start this podcast the way I do every podcast, and that's by pitching you, my guest. This one's going to be pretty easy. I went on your podcast 18 months ago. I've been following your writing and everything you write for over 5 years. You just launched the scienceofhitting.substack.com. I was literally a minute 3 subscriber. So, if 5 years of following, a minute 3 subscriber, if all of that doesn't speak to how much I respect you, I don't know what will. So, anyone who's listening, I encourage you, go check out Alex's new Substack. I think it's pretty interesting for people who are looking at, reasonably valued, long-term growthy plays that you can buy and just kind of compound at mid-teens or maybe even a little bit better IRRs for several years, but nothing's investment advice. That's just how I kind of think about what Alex writes.
That sounds perfect to me. I hope we can do that. That sounds fantastic.
Well, that out the way, let's turn to the podcast. Today, we're going to talk about Spotify. The ticker is SPOT. It's one of my favorite companies to think about. I think it was the first company you wrote about on your Substack. You've got a pretty nice sized position in this. So I'm excited for the conversation. I'm sure most listeners are familiar with the company. So let's just kick it off with a simple question. Alex, why is Spotify a good investment right now?
I guess to give the full story, my perspective would probably be that for a long time, I didn't think it could be or was. From a user perspective, I've toyed with YouTube Music in the past, and I eventually started using Spotify because they offered a free service, their free subscription. And, I've seen Amazon's offerings and other things like that. And my perception going back, a year or more was these are essentially commoditized services. They all have the same music. They all have similar price points. User experience is going to be roughly similar. So I didn't really see how they could differentiate from one another. And obviously there's a supplier component here where you're dealing with a handful of, record labels that control the vast majority of the content that you have to have. There's always been a little bit of collusion's probably a strong word, but in the book, The Spotify Play, they use the term thick as thieves, and they tend to know that there's value in kind of working together. So that was kind of my priors. As I started digging in more and more, probably one of the earliest things that jumped out to me was a comment from Spotify's Investor Day, which I believe was before the direct listing. And they talked about, obviously, their subscriber base, which you can kind of put those numbers together on your own to see that they're the leading player in the industry. But the other comment that they made had to do with engagement. And they talked about how the users on their platform engagement is meaningfully higher than it is at competitors like Apple or Amazon. And, the way I kind of framed it over time to myself was, if someone had brought me a thesis on Netflix 5, 6, 7 years ago, what were the numbers or the facts that could point to the outcome that we've seen subsequently happen? And obviously there's a ton of stuff that went on there, but I think the two that for me that would stand out the most would be, one, the large user base they had in SVOD, and then two, obviously the lead and engagement that they had relative to any competitor. So I think there's something valuable there. And Eck in the book, The Spotify Play, Eck mentions this idea of everything changes at scale. And I think that's part of what's going on here. So anyways, over time, my thesis kind of moved from this is commoditized to, well, they must be doing something right. They have more users and more engagement. And then in the subsequent, 6 to 12 months over the past year, I think you've seen them do a lot of things where they're trying to truly differentiate their service above and beyond what they've done so far to differentiate it.
Can I jump in with just two things? First, when he says Eck, he means Daniel Eck. That's the founder, CEO. I think he's one of the best executives out there. I think it'd be tough for anyone to argue otherwise. He started a multi-billion-dollar company. But let me dive into one thing. I'm glad you mentioned Netflix, because I think for a long time the case on Spotify has been Netflix 2.0, and we'll go to that in a second. But You mentioned you were reading the Spotify Direct Listing Day right before. And I think one of the things you said is over the past year, this was in your write-up, you said, over the past year, I've become increasingly confident in Spotify's future. And the Direct Listing obviously happened more than a year ago. And I agree, all that is interesting. But have there been any inflections or any things that you've picked up in the past year that has really built that confidence up?
Well, part of it is just the fact that I, out of laziness or just being blind to it, I never did the work on the name that I should have done, which happens to me all the time with all kinds of stocks. I'm sure it happens to everybody, so I don't feel that bad, but so that's definitely part of it. A big one here lately was the disagreement with the label in South Korea that led to, I don't know if you know about this, temporarily Spot in South Korea.
I do know about it because you put it in the piece. Of course I know about it.
So long story short, people can read about it, but eventually the label basically folded and decided that they had to be on Spot because this agreement was a global agreement. It didn't apply to just a single market. So it's just a good example of how the balance of power is somewhat shifting. And then the other thing I'd note, and again, this is from the book, is things like the Taylor Swift tussle that they had previously, where they've had these problems with artists over time. And when you look back in hindsight, I think the conclusion really is that at the end of the day, Spotify ended up being okay because artists know that they need to be where listeners are at. And we're talking about those arguments happening at a time when Spotify was maybe a tenth of its current size. So that's so much more true than it was 3, 5, 7 years ago. And I think as you see a lot of those things happen, it's changing the dynamics a bit. And I think it's become more apparent to me as a result.
And just to build on that, and not to, I try to be the neutral host and provide a lot of pushback, but I love Spotify. I do think one of the things that's happened is, like, even 5 years ago, artists made so much money from DVD sales and everything that the streaming revenue, they were very cautious of it. But now all the money's coming from their live tours. And when, as you said, when the artists get kicked off Spotify because their label's disputing, their live tour business goes to crap, and their merchandise business goes to crap, and their relationships with fans goes to crap. So in many ways, the artists, they don't care so much about the streaming money. What they care about is the engagement with fans and all that other stuff. And if you pull off Spotify, yeah, maybe the label cares about the money, but now all of your artists are really pissed off.
Yep, I think that's right.
So,
and that's funny because in the South Korean case, I mean, this may be biased, but from what I saw, it seemed like fans and artists were both much more incensed with the label than they were with Spotify.
Yep.
So,
yep. There are tons of bear cases on Spotify. There's absolutely no doubt about that. And we're going to dive into them in a second, but let's keep going on the bull case. We mentioned Netflix. I think I've always thought Spotify's Netflix 2.0. You mentioned in your write-up, everyone thinks it because for a while they had Netflix's ex-CFO as their CFO, and he would go on every earnings call, and anytime anyone asked him a question, he'd say, "Oh, I encountered this at Netflix, and we'll solve it, and we're Netflix 2.0 over here." So they've got, I think Ted Sarandos, the chief creative officer and co-CEO of Netflix, is also on Spotify's board, so they're definitely leaning into that. The big thing with Netflix is they went from DVD at mail to streaming to they own their own IP. Right now, I think Spotify, they are started streaming, and now they're going to own their IP with podcasts. So I jam on that wherever you want to, but how is Spotify kind of following the Netflix 2.0 path, and how do you see that evolving over time?
I'm honestly less sure about how exclusive content plays into the story here long term. Obviously, okay, the idea is that it will be part of it, obviously. And if you look at the letter that they just put out before this quarter, I think they're starting to play into this idea of, hey, we can be local on a smaller scale than anybody else can be by nature of our size, which is a good narrative. And it could potentially be additive to the business. I'm not saying it's not important, but at the same time, you'll see them do things like with Live, which I'm sure we'll talk about. But I also think a lot of it comes down to things like having the best tools for personalization and discovery on commoditized content like music. I think that's incredibly valuable and incredibly important. And it's part of what keeps people locked into your service over time. And it's one of the things that also allows you to charge more money potentially. So things like ubiquity and personalization, I think, are still incredibly important. Not to say they're not at Netflix, obviously, but I think Spotify can differentiate itself on commoditized supply. This isn't just a story about having, unique content that nobody else has. I think that'll be somewhat limited, actually.
So do you think the unique content, is it just because you think podcasts and stuff are less valuable, or is it like, and I'm saying less valuable compared to Netflix's unique content, or is it because maybe like it doesn't scale? You mentioned local scale. It doesn't scale quite as well. Like part of the podcast is the personality, right? So one of the great things with Netflix is they make Money Heist or Lupin, and that's in French or Spanish, and those become global hits. Whereas I don't think podcasting translates as well. Part of this podcast, I'm sure, I think most listeners probably listen because I'm so personable and they just love me. But I do. I kid a lot. I'm sure they listen because our guests are pitching smart ideas. But most podcasts it's the host interplay that really gets it. So do you think that just doesn't travel as well internationally? Is that why, or is there something else?
Yeah, I would think that's definitely part of it. I mean, it makes sense the way you just described it. I'd also be curious too how true that part of the Netflix story actually is. Again, I don't think it's irrelevant. How important is something like Lupin to their actual business? I don't know. I guess we'll see. It's certainly a narrative that plays into their favor, and it's something they like to talk about a fair amount. I'm not positive what that actually means at the end of the day, but maybe I'm wrong. But yeah, it seems like that is more relevant for Netflix than it would be for an audio platform like Spotify.
Let me give you another one. And again, this is probably going to be a softball, but I do think one of the things that Netflix's biggest advantage is the best advertising space for Netflix, in all of media, is Netflix's homepage, right? They can create a hit just by putting something on their homepage, and tons of people are going to click it. For Spotify, I think one of the things that gets their flywheel going is they've got so many users, and with like discovery mode and their playlists, they can create international hits and international stars just by putting a track into a playlist, right? If you and I release a song and they put mine in the top of a popular playlist, like there was all the stuff about the country hits playlist, just making country stars left and right, and yours is in a playlist, even if your song's better, I'm going to become a star and you're not. So can you talk about how that feeds into the moat and how you think about that long-term for Spotify?
Yeah, and it ties into what I was saying a minute ago about personalization and data and some of these things. I mean, obviously it's a balancing act. You can't let people buying placement drive everything. It still has to be a good, you know what I mean? It still has to be a good product at the end of the day. So that's an incredibly important balancing act that Netflix, Amazon, I mean, obviously advertising versus owning the content slightly different, but placement's incredibly important for these platforms. So it's something they always have to balance. I think for Spotify, one of the ways that this will really be a benefit is that, as I mentioned a minute ago, the labels tend to operate pretty closely with one another. I think this is one way to somewhat inject some competition onto the platform is to get labels and really artists. They know exactly what you just said, and they know how incredibly important it is to be on a certain playlist. So that is the type of thing they're very focused on because it drives plays, it drives ticket sales, as you mentioned. So I think it's one interesting way where obviously Spotify can make some money through either directly or through reduced rates, which they've talked about. But I also think it's a way to inject a bit of competition onto the platform amongst the labels.
Yep. Okay, so I'm going to start throwing out some bear cases. Again, there are a lot of bear cases. This is a company that it's competing with giants, so there are certainly bear cases out there. Let's start with the first and most obvious bear case. Look, you mentioned it for a long time. You just looked at Spotify as commoditized. There are giant players who are playing, and a lot of these giant players aren't necessarily concerned about making money in the music business, right? Amazon Music is basically given away for free. If you don't want to pay anything, you can go use Pandora for free. Not many people are doing that anymore, but Pandora's out there for free. YouTube Music, you could just go listen to music on YouTube if you wanted to. And then obviously the big daddy is Apple Music is out there, right? So when you look at those and some of the competitors, especially Apple Music's advantage is enormous. If Spotify's monthly price, I don't know, family plan, I just got something there, flexing pricing power, but it's about $15 per month. I sign up through my, if you sign up through Apple, you're going to have to pay the Apple tax of about 30%. Whereas if you go to Apple Music, you pay them $10 or $15 per month. That goes straight through to Apple, right? So not only are they disadvantaged because Apple's so big and they don't necessarily have to make money off, they're disadvantaged structurally from a cost standpoint, because if you're signing up on your iPhone, they're starting off with 30% less dollars. So how do you think about the competitive landscape here?
Well, the answer is that I think you're right, and it's very competitive. And I think Apple will inevitably do well with a certain subset of smartphone owners, of internet users. That said, obviously, iPhone unit share globally is not nearly as impressive as it is in the United States. Even in a market like the United States, Spotify's done quite well on both the ad-supported and premium side. So I think it's a reality that has been a reality for many, many years. It's interesting in Spotify Play, which I'll come back to 100 times, but a big part of the story is basically about running parallel to Apple over the past decade. And after reading that book, I went back and pulled the Steve Jobs biography and read a little bit about music in there too, the Isaacson book. And I guess the point I'm trying to make is this has been a reality for a while, and I think it'll ebb and flow. At the end of the day, though, I put a lot of emphasis on having a team that is 100% focused on a clear goal versus a team operating inside of Apple that, I mean, to your point, maybe their focus isn't to make money. What exactly is their focus? How are they compensated? You know, those things are not always clear. And I think of the example, I just listened to a big Tim Cook interview this week. He went on Kara Swisher's podcast for the New York Times. It was a pretty long interview. I don't think music was mentioned once. I mean, it's just he has things to focus on, and music really isn't one of them, or getting better at podcasts really isn't one of them. Can he delegate that to somebody else? Sure. But as you move further and further down the line from the person who's in charge of making the big decisions and driving the mission of the company, sometimes you have leakage. And there's a reason why Spotify's ahead now, despite the fact that Apple started from a hugely advantaged position with iPod, iTunes, etc. They still have a ton of advantages today that will definitely help them. But I feel comfortable thinking that Spotify will continue to take, you know, a fair share of the growth.
Yeah, and I guess I would just add two things. Again, Netflix 2.0, it reminds me for years the bear case on Netflix was, look at all these other people. You know, Amazon Prime gives it away for free. Apple's going to get into it. Disney Plus is coming, all that. And it just didn't matter. Netflix was maniacally focused on one thing, and they did better than everyone. And because of that, people were willing to fork over their money. And I had a second point on that, but I can't remember it. If I do later, we'll come back to it. But let's talk about the other point. And these two are kind of connected. So the two bear points are operating leverage. We haven't seen any operating leverage in this business. And I think that is related to, you know, there are 4 big music labels that control almost all of the music that everyone listens to. And if any one of those music labels played, and we've talked about this a little bit so far, but, you know, the big worry has always been, what if one of those music labels pulls? And then all of a sudden Spotify has, you know, 66% of the world's music and Apple has 100%. And you just see people, you know, we lost our Taylor Swift, so I'm fleeing over to Apple Music to do that. So we can hit on both of those, the music labels as a threat and the margins.
Well, one interesting place to start this is when Spotify saw their step up in margins over the last few years. I mean, there was one noticeable step up before the IPO. And as they noted in the S1, or the equivalent of the S1 for foreign issuer, that was directly attributable to negotiations with the labels. So it's funny to think about exactly how they were thinking through that decision. I've had some people tell me, for example, that they think it was because the labels had ownership in Spotify, so they thought it would lead to a better valuation when it went public. If you have a long-term perspective, that sounds a bit insane, considering that they might end up being your biggest customer 5 or 10 years down the road, which looks like it's going to happen. So I don't know how to totally think about that. At the same time, I also think Spotify has a huge percentage of their listening attributable to songs that they recommend to people. And losing a label surely would not help, but I think that's one way that you alleviate that problem. How much of listening on the platform is people just going out and searching specifically for the Rolling Stones or, you know, whatever band? I'm sure a decent amount is, but once you become a user for a long time, how much of your listening is clicking on like songs or clicking on recommended playlist? I think that's a big part of their business, and it's somewhere that they have to continue to get better. I think they've said, you know, we'll get to the point where we can pick a song for you better than you can. And to the extent that they can make that happen, the labels still are obviously incredibly important, but it lessens any one label's ability to kind of dictate the conversation. And it's also funny to think about, in my mind, when Spotify launched in the United States, they had to go through this dance of getting the labels to agree to be on the platform and obviously set terms and all that. And when they finally managed to get it done, they got the three biggest labels, I think, or three of the top four, and they sent an email to the fourth one, whoever the holdout was, and said, "Hey, we've agreed to terms with everybody else. We're launching the product in X number of days. We hope you're on the product, but if you're not, it is what it is." And just reading that to me is kind of funny to think their position at that time was so incredibly different than it is today. Again, we're talking about hundreds of millions of users now. I think their negotiating position is probably stronger than people give them credit for sometimes. That said, how that shows up in the income statement is where, in some ways, I think they can play the long game. You don't need to directly negotiate for better terms right out of the gates. You can do things like making sure that you've secured global licensing for all the content that you need, because when you go to new markets, you want to make sure you actually have a good product. You can do things like we were talking about a minute ago in terms of getting the labels to start bidding against each other for placement. You can give them tools that actually make their lives easier so they do a better job for their clients, the artists. So I think there's a lot of ways that they can actually get to the end game here that are not as direct as sitting down at the table and saying, "Hey, we want 5 additional points of each dollar of revenue versus our last contract."
Mm-hmm. Mm-hmm. No, that makes tons of sense. And no, and I also agree with you. Like, this is just my personal experience, but when I go on Spotify, like I generally don't go search for a specific artist. I generally just go and play. Hey, it's Monday. My new Discover Weekly is out. Or, hey, it's Friday. My release radar is out. Hey, I'm just going to click on the Made for You playlist or something, right? So I'm not searching. So if a big label pulled, yeah, it would suck. And at some point I would probably notice, but it would probably take me a couple weeks to actually notice that a big label pulled. And in that couple weeks, I guarantee you that big label is going to be hearing from, especially their major artists, who are like, "What the hell is going on? Nobody's using my stuff," and everything. Let me ask you a related question. Recently, Taylor Swift, for those who don't know the story, Taylor Swift, basically her back catalogs of all of her old CDs, 1989 Fearless, the CDs she wrote when she was younger, that got sold to a private equity sponsor, I believe. And the private equity sponsor thought everything was good, and Taylor Swift was not happy about it. And Taylor Swift went and re-released one of her albums, right? And what she did is she recorded it now. She recorded now, and she released it on Spotify and everything as it was Fearless. Taylor's version is what she called it. And she also stopped approving the rights to use the other version in a lot of commercials or movies and everything. And because of that, I think she's going to have the private equity firm fold on a lot of the rights to her old song. When you look at how Taylor Swift is a completely unique artist, maybe the biggest artist in the world, all that. But when you look at how that dynamic played out around the rights, and Spotify wasn't even really involved there, but do you see any good or bad points for Spotify going forward in that negotiation?
The honest answer is I'm not totally sure. The thing I come back to is, for someone like Taylor Swift, and I think Daniel Ek wrote a public letter, when they had the issues with Taylor Swift, however many years ago that was now. And I think he specifically said in that letter, our incentives, what we want to do is completely aligned with artists. And I think, as a general statement, that's true. Their goal is to make streaming music or streaming audio available everywhere, to make it incredibly accessible, which obviously would drive engagement and more listening and more, fans that love artists. And I think they're generally aligned in regards with all that stuff. And they have to do this weird dance because there's another party involved between them and the artist, whether it's a label or someone like this PE firm. So I don't entirely know, but at the end of the day, as a shareholder in Spotify, I feel really good about the fact that I don't think the company's ability to make money long term is dependent upon taking advantage of, contracts or anything else in a way that I don't think is sustainable. I think their success long term is dependent upon people like Taylor Swift and creators of all kinds being successful and fans being able to find those people. So that's what makes me comfortable with the investment.
Perfect. All right, let's put some more bear cases. And again, two related ones. I think there's valuation and opportunity costs. And let's start with valuation, because I think this will build into opportunity costs. So valuation. As we're speaking, Spotify's trading about $260 per share. I'm just looking at my model. That's about a $50 billion market cap. And let's just call it a $50 billion EV to make the numbers nice and round, right? Spotify, they're basically break even, I would say. So you're looking at infinity multiple if you're kind of looking at them on an earnings basis. And on a user basis, I think that's $110 per monthly active user, about $250 per kind of premium active user. And I'm basing this on their 2021 year-end estimate. So that's a little forward-looking, but I think we get the gist, and we're fine talking around numbers. So when you look at Spotify, and we've already talked about how they haven't really had operating leverage so far, how do you think about that valuation?
Well, the first thing I start by saying is that in general, I don't feel great about it. And, I at the same time, that's true for a lot of the companies that I've either followed or owned that I think are really high quality, that have potentially very attractive long-term opportunities, both in terms of, increasing their user base, increasing pricing, increasing profitability, et cetera. So as always with these things, I think you need to have some thoughts about what is going to happen over the next 5 to 10 years and what your company's positioning will be as that happens. A company like Disney is a similar idea. I mean, any way to try to value it now at $180, $190 a share relative to historic earnings is going to look very expensive. But if you think about what it means to have the highest quality IP in the world as you go direct to consumer on a global basis, and presumably have some pricing power as you do so, you can start to get some interesting numbers as you play with those assumptions. So obviously, as an investor, it's your job to figure out where that gets you. For me, as I think about Spotify over the next 5 to 10 years, I do believe that they're in a position to continue to grow the overall user base and the premium base at a fairly attractive rate. And I ultimately think that they can also get to double-digit operating margins on a run rate basis. So, as I run the math, I think at current levels, you can get to a valuation that appears somewhat reasonable on, call it 2025, 2030 numbers. And even to the extent you agree with that, then you need to ask yourself, okay, well, what does that mean when they get there in 2025 or 2030? And as I think about what that looks like, I think it's an incredibly compelling position where they can do things in all of audio that has never really been possible before. And, somebody listening to this might say, well, that's a lot of talk without very many numbers. And I think one of my learnings as an investor is that the numbers need to be secondary as part of the whole exercise. They're obviously not irrelevant, but they're secondary. So I don't have some of the math right in front of me, but as I work through the numbers, I think this can be a reasonably successful investment at a current valuation of, as you said, roughly 50 billion. So for me, it's not a massive position in terms of the sizing, but maybe it becomes significantly cheaper at some point too. And if the story hasn't changed, then it can become a massive position. So it's something I feel comfortable betting on. Admittedly, the sizing is, for me, it's basically just an average position size.
Hey, I think you put it in your write-up, so I'm not breaking any news here, but it's a 5% position, which, for you that you say average, but for most people, that's about average for me as well. But for most people, that's a pretty big position. I think even for you and I, average, that's a pretty big position. And I like what you said on the numbers there. The way I've recently started thinking about it, and this is a little bit more meta, but I'd love to hear how you think about it. When you're dealing with an average business, right? A steel mill would be below average, but maybe a cable company, that's above average, but the numbers really matter there, right? Because they'll grow a little bit, but they're not going to grow 30%. They're not going to put up the quarters that Facebook, Microsoft, Google, and everything have been putting up this quarter, right? But when you're dealing with one of these platform companies that, if you buy a platform for 5 times price to earnings, you're probably actually going to lose money because the market's pricing in that the platform is falling apart, right? You need to get the platform right. And then the operating leverage is so huge and the optionality is so big, like Amazon building Amazon Web Services. Nobody would have seen that coming. And it's kind of crazy it did happen. But the reason they could do that is because they had this giant retail platform and they had visionary leaders. So I think you are right on that. I'll flip it over to you if you want to say anything a little bit on that philosophy or anything.
No, I think that's exactly right. And that's how I think about it as well. The one thing I'd add to it is when you start to get into these scenarios where you're basically betting on a 0 or 1 outcome, when you have quarters like Spotify just had, where let's just say the market was right, and there are reasons to question the thesis now because it's down 10%. I think those are the type of situations where, as an investor, you need to be very honest with yourself about what kind of bet it is, and then that should influence how aggressively or not aggressively you are with either buying more, continuing to own it, whatever. I think you need to be very honest with yourself about what the bet is, what it can be if it's a success, what it'll be if it's not a success, and then position yourself accordingly. I'm not sure if that makes perfect sense, but
You know, I don't play the quarterly earnings numbers game. I was a little surprised that the market sold Spotify off 10% on those numbers. Like everything I saw in those numbers, I saw nothing that said, I didn't see a single thing in those numbers that said, hey, this doesn't have a chance to be the dominant streaming platform. And like, I think they're doing all sorts of things correctly. If you want to comment on anything on the quarterly earnings, go for it.
no, it's just the idea of, it's we're all long-term investors, right? Some of us really are. And so
they get punched in the mouth.
Exactly. So it's this idea of how do you think about quarterly results and how do they influence your thought process? And I guess the answer in some ways might be, well, I just don't. I make the bet and I see how it plays out, and it is what it is. And I think there's some validity to that idea. On the other hand, if you're going to try to look at things like this and say, okay, well, when user growth slows for a 6-month period, how do I incorporate that into my thesis? It's incredibly difficult to do. And so I think what I was trying to say in the first part there was, in some ways, it actually is very helpful to just place a bet and not let yourself get sucked into the game of continuing to bet on something just because it goes down 10%. Because that sounds like a lot, but to your point, if you're buying that platform at 5 times earnings and the platform's going away, then it's not a better deal because it's down 10%. So I think there's just a component of that that's worth thinking about as you're making any individual investment or constructing a portfolio.
Let me switch to my next bear case, and this is opportunity cost. And I want to come at this for 2 ways. The first way is actually the Andrew Walker is wondering if Twitter or Spotify is a better investment, right? So I think they are interesting comps, right? Because I mentioned when we started talking Spotify valuation, $50 billion enterprise value, about $250 per, was it premium user or monthly active user? I think it was per premium user. Yeah, per premium user. Guess what Twitter's valued at right now? It's valued at $50 billion and it's valued at $250 per daily. Now, we are talking complete apples to oranges in terms of just about everything, right? Except for the fact these are both internet platforms that I spend a lot of time on, and I really like both of them. And right now, full disclosure, I own Twitter. I don't own Spotify. If I sold Twitter, I would probably use the proceeds to buy Spotify. So I don't know how familiar you are with Twitter. I know you're a user, obviously, but when I'm looking at the two of them, my push to you would be, hey, I can buy Twitter and they're already EBITDA positive. I know they've got mammoth operating leverage because as they add users to that, they do not have the same gross margin problems that Spotify has. And you want to talk upside optionality. And this is the thing I've been saying forever. Twitter literally has the power to overthrow governments. Now that probably comes with a couple of regulation problems on it, but they don't have the big label issue that Spotify has. They've got tons of optionality, and I do think both of them have interesting. We'll talk about this later, but Spotify bought a semi-Clubhouse competitor called Locker Room. Twitter's launching Spaces, which I do think both of them have interesting live audio problems. In fact, maybe both of them belong together at some point, but we can talk about that later. But when I talk just that individual opportunity cost, why is Spotify better than Twitter? And you can also say I haven't done a ton of work on Twitter if you want to.
Part of the answer is I haven't done a ton of work on Twitter, or I did, but it's been a couple of years and I haven't kept up to date on it. The other part of Twitter that stands out to me is, as we discussed, I have a Substack. You have a platform that you go direct on. There's other people that we both know that do the same thing. And it's funny for me to think that Twitter is a massive customer acquisition channel for all of us. But at the end of the day, we all end up going to different platforms. Obviously, Twitter has an interest in changing that. I'll be curious to see if they can actually do it successfully. I look at a product like Review, which is, I don't know how much you've actually looked at Review. It's their basically competitor Substack. The functionality on it is very, very basic at this point. Obviously, they're going to invest in it and make it better, and we'll see what they can do there. Will they be at a meaningful disadvantage by that point? Because as you and I discussed before this podcast started, tons of people already have their credit card information on Substack, and it's just going to be where a lot of people default to. Obviously, Substack can change their rates if they have more competition. Things like that, just it's not entirely clear to me that they found out how to take what they have, which I think is incredibly valuable in terms of eyeballs and, getting people on the platform and turning that into an actual business. I'm sure they have in some ways. I'm not sold on it yet, but again, I haven't done a ton of work on it, so I could just be completely missing the big nugget.
No, that's fine, and it's all friendly conversation, right? Let me provide one pushback. You said Twitter's a great customer acquisition tool, and that's undoubtedly true, right? And I think we're going to talk music labels in a second. One of the reasons you would prefer Spotify over a music label is Spotify owns the customer, right? And we talked about how they own the customer. They own that personal history. They own discovery, all this type of stuff. Well, I think we could take it one step further, and like this podcast will be on Spotify, but the way most people will find this podcast is they'll find it when I throw out my Twitter post or when someone shares it on Twitter or something. So yes, Spotify owns the consumer, but in some ways, isn't Twitter owning the discovery there?
Yes, but how is Twitter making money off of it versus how is Spotify making money off of it? That's where I get a little bit more confused. Spotify has a very go ahead.
No, you please. I don't want to interrupt you. I want to hear what you have to say.
I think it's a very clear value prop for users. And there's a reason why, even with a free offering, they've been able to convince 40% plus of their users to convert to premium. And I think that's the part of the equation that for me is, well, one, it's incredibly impressive. As they have this podcast called A Spotify Story, which is basically about a lot of the things they did that got them to where they are today. It's a podcast from the people at Spotify. And
I'd be a little biased.
Well, they're telling their own version of the story, but they talk about this idea of how they've managed to convince free people to become paid, and it's just interesting to think about that decision. And maybe Twitter can find some comparable way to monetize. I'm just not entirely sure. Of course, for them, if they do that, then they're shutting off all the new users, right? So I don't know. It's interesting to think about. I'm not sure what's happened at Twitter today that makes it so much different from the past few years, but that's where great investment opportunities come from, right?
Yeah, and I'll pitch. I did a podcast with Elliot Turner right when Twitter fell off on the heels of banning Donald Trump, and they fell and people were freaking out. And we discussed some of this stuff. So I will push you for that. And maybe in 6 months, we'll be talking about your next piece where you bought Twitter. Let me approach opportunity cost from another angle. And this is actually a question I got a lot on Twitter when I mentioned that you were coming on here. And the question was, hey, why buy Spotify when you could buy one of the music labels? And I think the one that most people were thinking it was Vivendi, where I believe just about all of the enterprise value is covered by their stake in Universal Music. I believe Tencent bought about 10% of Universal Music at a valuation that implied about a $35 billion valuation. So let's just pretend Vivendi is a universal tracker and you could buy Vivendi for $35 billion, Universal for $35 billion versus Spotify at $50 billion. Why do you want to buy Spotify, which has these operating leverage problems we've talked about and all this, versus Universal, which has a great runway for earnings? They own these great libraries. They've got a live play as live comebacks and everything. Why would you prefer Spotify versus them?
Yeah, it's another name that I need to do more work on, and obviously to bring this research process full circle. So it's something I'm definitely going to spend more time on in the future. I do think about the position they hold in the eyes of their key constituents, which in this case would probably be the artists. And you read about things like artists over the years trying to launch their own streaming services. There's certainly a sense that the artists don't feel in many ways that they've had a fair shake as a result of the way the industry is structured. And, I'm not well versed on some of these kind of independent or less controlling solutions that are coming out and trying to be a tool for artists to obviously get on services like Spotify and to basically be a label, but in a different way. I'm not well versed in those things, but my sense is that the world is moving in a direction where it's less relevant for them to be securing plays on a radio station or securing shelf space at a Best Buy or something like that. Obviously, it might just transform into securing shelf space on Spotify or on Apple Music. I wonder how much those tools evolve and become easier to use without an intermediary. So those are just very high level thoughts, and I would need to do more work, but it certainly could be an interesting place to invest if you believe some of the things about audio and music that I do. So.
Yeah, for me, the music labels, I just look at that, and if I put on my really long-term vision and think 10 years from now, I think a lot of artists right now are becoming huge they have a breakout song that they market on that breaks out because they share it on Twitter or YouTube or something, and then they put it on Spotify. And after they've already been discovered, they kind of go with label. But I can't imagine longer term that the labels aren't getting cut out of this in some form. If you and I form our rap duo and we release an album and it goes viral, like, I don't really know why we'd go sign with Universal instead of just uploading everything to Spotify and like playing all of that. Maybe we get an agent to do the live tours and stuff. But it reminds me a little bit of like an NBC or something has the local affiliate, which, a Gray or something will own. And that's a product from the 60s. They didn't want NBC controlling the local news for 100% of the country. And you do wonder, like, going forward, as people cut the cord, what is the local affiliate's role in the world? Because all they really produce is local news, which is valuable, but it's kind of a commodity. I don't know what the label's role in the world going forward is, because as everything's internet, I think a lot of people are just going to be incentivized. I go make stuff myself. I get my own following. I upload it to Spotify, and I keep 100% of the proceeds for myself.
Yep, I agree with that completely. And more importantly, you start writing the songs, I'll get her account set up on Spotify for this rap duo to get started. I'm liking this idea.
I thought you were going to write the songs. I was going to be the front man and you were going to write the songs. We'll talk about it. Let's talk about the live opportunity, because I think that live and podcast opportunity, because I think both of those are huge. We touched on podcasts second, but I'll just flip it over to you. They bought Locker Room. They're buying a lot of originals. They mentioned the Joe Rogan podcast, the Joe Rogan Experience, which they bought a ton. I love The Ringer. They bought The Ringer. So how do you think about both the live opportunity and the podcasting opportunity evolving going forward?
Yeah, obviously the live opportunity is a lot more nascent than podcasts, but podcasts are also relatively nascent as a category, and in terms of at least getting people to listen and listen consistently. I think what Spotify has shown already is that by caring about that category and by making it prominent on their platform, and by, obviously going out and doing deals to get high quality creators on their platform, that they've been able to drive listening, and people are interested in doing this. In terms of them placing the bets and knowing what's going to happen, I think it's smart that they do things like they did it with Locker Room. You place a small bet and you put people on it, and try to figure out how to win in that space, and we'll see if it becomes something real or if it just goes away. But if it just goes away, it's somewhat of a rounding error that a company like Spotify can afford, versus if they just missed it completely and it became something huge, then you got a problem. So I definitely think those types of deals are smart. Ben Thompson wrote the other day, he said Spotify has shown the will to support openness and independent creators. Like, that type of idea encapsulates so much of what I think about what they do. I think that they truly make it better for creators, for musicians, whoever, and they also make it better for fans. So as long as they continue to do that, I think they can address every opportunity that comes up in the audio space, and potentially some stuff that blurs into video. So
we'll talk video in a second, because that's one I've never really been able to wrap my head around with Spotify and video, like why they haven't moved in it with the optionality there. But have you listened to a podcast, or I guess not a podcast, have you done anything with the Locker Room app yet?
I have not. I haven't used any of the live products yet.
I just, when I look at that, and I tweeted this out, but Clubhouse is a buzzy hot startup. And when I look at Twitter Spaces and Locker Room, so the way Locker Room works is like you and I could do this podcast, and we would do it live, and then we could open it up and have people who are listening live. They could hop on and ask a question verbally, or they could just type in a question if they wanted to. And I just look at that, I'm like, I don't know how Clubhouse competes with that, because Clubhouse, you can spin up random spaces, but like, if you really like my podcast and I say I'm having Alex coming on, you could listen live, and you could just be typing in topics and doing that. And like, I just don't think Clubhouse, I think the fact that Spotify is marrying the podcast ownership with the live, I think that beats Clubhouse. And then for Twitter Spaces, I think the fact that they marry, hey, we have all the industry breaking news and everything, we can spin that up into Spaces. I just think Clubhouse is in trouble in terms of that space.
Yeah, I would tend to agree with that. It's not clear to me why they would win. And I also think a big opportunity with all this stuff is, obviously the live component of it all is important, but if this podcast right now is live, people could listen in, but there's also a ton of need for the ability to have it on demand and to listen afterwards, whether it's an hour afterwards or 6 months afterwards. So I honestly think a lot of that just plays into Spotify's advantage. And again, a big part of all this will be, as we kind of discussed before, with placement for individual songs in a playlist. A lot of this is taking that real estate you have that's incredibly valuable on the front page of that app and finding how to, again, you can always get caught up in the commercial interest of what you want to throw up there, but you have to balance it against what makes it the best product for your customers. So as long as they can stick the landing on that, I think they have massive opportunities throughout all of audio.
Yeah, but just quickly to your point on listening later, that's one of the things I love, right? Because if you and I wouldn't did a Twitter space or a Clubhouse on this, like anyone who couldn't listen live for any reason would never be able to hear it. But with Locker Room, with Spotify, like we could spin this up, we could do it. And then people also, hopefully a lot of this conversation is semi-timeless, right? Like hopefully we're discussing the strategy and not just quarterly earnings. So 4 months from now, somebody who gets interested in Spotify could come and listen and do that. So I just love Spotify's position there. And Clubhouse just raised a valuation at 4 billion and Spotify's 50 billion. So if they can capture it, you would think, oh, they could create roughly 4 billion in value. Let's turn to video. It's one of the things I've had the most trouble thinking about with Spotify because they've got Netflix members on the board. So maybe they have some video ambition, but also if they really had video ambition, you would think the Netflix members would resign. I think there's some synergies, but it's kind of weird. So how do you think about video opportunity or any other like kind of not moonshot, but other kind of synergistic opportunities out there for Spotify?
Yeah, I think it depends if you're talking about music or non-music audio. In the music space, I think there's opportunities probably. Obviously, they do things now like where you listen to a song, you'll see almost like artwork, I guess you would describe it. There's probably opportunities to do things there with video in terms of maybe concerts or something over time would be more of a live play, but video would obviously be a value add to that product. And then for non-music, something like the Joe Rogan Experience, I would presume that a big part of its success over time on YouTube was the fact that it had video. And the other nice thing that YouTube has that other podcast players do not have is clips. So I think they've been explicit about it, but I've definitely heard Joe Rogan say that part of the agreement that he has with them is that clips should be part of the equation, basically, because I think they recognize how incredibly important it is to have a 7-minute clip on a specific topic versus just assuming that everybody's going to go in and listen to a 2.5-hour podcast. So I think there's a massive opportunity there as well. A lot of these things for me come back to the same idea of how do you present that in a way that is attractive to users versus information overload or jumping into too many different directions and your product kind of loses its focus. So I don't think many of these things are easy to do, but I definitely think there's an opportunity for them to incorporate video in some areas.
This is a tougher one, but Spotify, they clearly want to own some of their podcasting content and stuff. And that does introduce some risk. So like, especially Joe Rogan, he can be controversial. He said some stuff. He said stuff over the weekend. He said young people shouldn't get the vaccine, which, oh boy. But for Apple, if Apple has a podcast that's an issue, Apple can just take it down if they decide to do content moderation or something. But Spotify's got a double issue, right? If they want to take it down, and I think they have taken some legacy Joe Rogan down, they have to both make a content moderation decision and then they have to go to their talent and they own it. So they're kind of conflicted on if they want to take something down or not. And they're going to piss off their talent. Like if I was Joe Rogan and you took down my podcast on that, I would not be happy. Like, my whole thing as Joe Rogan is I'm a free thinker and I express my opinion and I put it out there bluntly. So how do you think about the risk of kind of content moderation, especially as Spotify dives into the ownership strategy?
Yeah, my buddy Francisco Oliveira sent me an article today, and the intro to the article was Spotify had an employee meeting, and they put up some quotes that someone said in a podcast that was on the platform, obviously, and they asked these employees, like, what do we think about this? Should this podcast be removed? And I think it was like unanimous that they should remove the podcast. And the person who was presenting then revealed that that was actually lyrics from an NWA song. It wasn't something said in the podcast. I think the point there is it's a good one. This is obviously an incredibly gray area in terms of what is or isn't acceptable on these platforms. And I think all that you can do at the end of the day is set relatively clear rules. If I was the person responsible, I don't think Daniel Ek or Mark Zuckerberg or any of these other people should be solely responsible for saying what that actually means. I don't know if it's a bigger tech industry decision in terms of, what is or isn't acceptable on these platforms, but I think those rules need to be as clearly set as they can be. And then, someone like Joe Rogan, I think he's a relatively reasonable guy. At the end of the day, when you've recorded thousands of hours of podcasts where he might be high for a good portion of those hours. You're going to say things that maybe come out wrong or that are just not well put, or, so it's the reality of doing all this. And I think reasonable people are going to understand the fact that, there's going to be a line somewhere. But do I think Spotify or Daniel Ek specifically should get into the game of censoring what someone says during the course of a 3-hour podcast? I personally think that's kind of crazy, but that's just me.
I'm with you. Look, it's just tough because you mentioned Francisco. He came on and we talked Roblox, and I had to ask the same question on Roblox because there's a Wall Street Journal article where, my 5-year-old kid goes and he went into some weird like S&M Roblox world, which I don't know why anyone would want to create an S&M world. Roblox. You have to think about this stuff. It's just, the internet.
No, definitely.
It provides great scale and great opportunity, but there are, scale comes with some really weird tail ends. So it's kind of weird.
Interesting side point. Facebook made this comment, or, not Facebook, someone who represents Facebook made this comment in front of Congress about the idea of safety and security. And, people kind of took the comment as being, well, now that Facebook has built up its safety and security business, or its ability to do these things, now they're putting up the wall so another competitor can't build the next Facebook. And I think that's one way to look at it. The other way to look at it is that Facebook has probably built up something where they can actually sell the safety and security ability of their platform to these other platforms that are going to come up over time and face identical issues. So I've never heard anybody talk about this in terms of the company, but I'd be curious to see over time if they can actually make a business out of that and find a way to take the expertise that they've developed and sell it to maybe not a Twitter or a Spotify, but a way to monitor and to remove content that has obviously been agreed upon to be harmful or violate rules.
That's interesting. It's interesting optionality, but I think it's such a unique advantage to them. I would guess that they don't want to do it. One more thing on Spotify's optionality. One thing I've really thought about is, Spotify owns the customer relationship. I think there's huge opportunity with them. With artists make almost all of their money now is in endorsements, and particularly in concerts when the world reopens again. How do you think about about Spotify interacting with concerts and kind of live events in the actual physical sense going forward?
In the physical sense, meaning at the actual concert venue, or you mean a recording of it on the platform? What do you mean?
So I've always thought Facebook knows that I love Taylor Swift, and Taylor Swift needs no help selling tickets. But I do think if a Taylor Swift concert's coming through the area, the best person to sell, or let's take someone a step or two below Taylor Swift. In high school, my favorite band was Fall Out Boy, to let people know how cool I was in high school. If Fall Out Boy's doing a reunion tour, I'm probably not going to know about it, but it would be pretty easy for Spotify front page of the Spotify app when I open it up to tap in and say, hey, Facebook's touring in your area, buy tickets here, right? And that would be artists would love it. I think Spotify could take a huge clip, and you have to start wondering at some point, does Spotify start tapping into, start tapping in there? Do they start cutting into Live Nation? Does Spotify just start throwing the freaking concerts themselves, recording them, making money on the merchandise, and then putting them on Spotify and getting fans listening to them and getting unique, they would probably own the rights to that live recording. So they start getting unique things that starts cutting the labels out. So how do you think about that type of optionality?
Well, to start by saying that I also like Fall Out Boy, and I thought it was still cool to like them. So I'm very sad to hear that it is not.
For me, it's still cool, but my wife tells
Okay.
me all the time that it's not. So,
Now that you said it out loud, I'm going to assume that she's right and we're wrong. So, but no, I agree with that general point. I think it goes along with the idea of artist recommendations and things like that. It's a way to help artists and labels as well, to the extent that they're aligned with artists. It's a way to help them more effectively monetize what they do, and it's a way to get in front of fans, in a way that would have been harder to do previously. And as Spotify is able to offer these kind of services, I think they'll be compensated for doing so. And it's a good example of why I don't my personal focus, especially in the short term, meaning the next handful of years, my focus is not on Spotify going into a meeting with the record labels and directly negotiating lower rates. I think it more likely comes through things that grow the pie and make life better for labels and artists directly, and Spotify can share in that. And I think that's going to be the most effective way to do it. So yeah, that's another example of how I think they can get there.
Let's talk M&A real quick. So, Spotify's done some small acquisitions. We mentioned Locker Room. They bought Ringer. They bought some podcasting thing. But let's talk a little bit larger than that. When you think M&A, are there any larger companies, real strategic mergers that kind of in your head as a shareholder you would love to see Spotify? Let's stick on the buy side, because you might be disappointed if Spotify got bought out for a 50% premium tomorrow, but you'd probably be pretty happy too. But, on the buy side, are there any targets you've thought about strategically that you think if Spotify put out a PR tomorrow that said, hey, we're buying this company, you would be like, let's go?
Honestly, no. Maybe I haven't thought about it enough, but no, there's nothing that's really come to mind, because it's almost like we've come back to Netflix a couple times. It's almost like asking that question for them. And maybe the answer would have been a Disney or somebody with content that they could obviously monetize long term, or maybe a deal to get Parks from NBCU or something to try to get that full mousetrap, for lack of a better term. But no, I don't. I think Spotify's ability to grow and to capitalize on the opportunity ahead of it is solely within their control of everything they have right now. On the other side, though, I have wondered about the fact whether or not Spotify would be an interesting target for Facebook. And I obviously think that there would almost certainly be regulatory issues with anything that Facebook tried to buy, especially if it was big. I'd also be curious too, in this case, if European regulators would not like the idea of a very successful European tech company being bought by bad old Facebook. So I haven't thought about that incredibly deeply, but I know Eck and Zuckerberg seem to be pretty good friends. And if I had to guess, it's the kind of sale that would only be done if Eck was doing so kind of out of a position of weakness, would be my guess. I don't think he has any interest in selling, from everything I've read. So on both sides, I'm not sure.
I'm with you. I think Spotify is one of the few European tech champions, and I think the European regulators, I think Facebook would be tough, but I do think you mentioned NBCU. I think Comcast would be really interesting. There would be some pretty interesting synergies with Spotify, Sky with the European sports, NBC with all of the theme parks, the shows. I think there could be some interesting stuff there. I've always thought Twitter and Spotify could be kind of interesting together. There'd be kind of interesting synergies with fan generation. But I'm with you. I don't think they need it. You mentioned Netflix. For years, all you heard was Netflix needs to buy a movie studio. Netflix needs to sell to someone. And Netflix said no. I mean, they've basically done it rounds to zero acquisitions, right? They did 2 small IP acquisitions and that's it. And Netflix showed, hey, we can build all of this stuff. And one of the things, the other thing that was interesting, the Spotify podcast we talked about, I believe the last episode that posted yesterday, I have not listened to it, but it's titled Buy versus Build. So I'm kind of interested to hear how they think about that.
How do you think about that for Twitter, while we're talking about it, just because we brought it up before? Do you think there's something that Twitter could buy that would be really interesting for them and improve their prospects? Or is it kind of just, they just need to execute?
Yeah, I think it's execution. I really like the review acquisition. I was hoping they'd buy Substack, to be honest with you. Just go, in tech, buying the second place player often is a disaster. And review they were basically like startup. That was more an acquire than anything, I believe. But I think buying Substack would have been so interesting, because Twitter is the funnel to get to Substack. Twitter would
Yep.
get that. They'd get the credit card information for users, which would be great for advertising targeting. It'd be so seamless for the signups. They've really improved a lot of their advertising, but having that credit card information, they could just do direct buy on Twitter's platform. So I think that's really interesting. And as you said, I don't think Twitter needs to buy anything, but I do think there are a lot of interesting things that Twitter possibly could buy.
I know Scuttleblurb, we talked about him before the podcast started. He puts out like an annual, just an update on his, his subscription business, which is a fantastic read. And it's really cool of him to be transparent about that. And it's really helped someone like me as I launch my own thing. But he's pretty explicit in there that Twitter is the vast majority of his audience has come from Twitter. And from the data that Substack shows me, I've had the same experience. And it's funny to think, as you said, they decided to buy Review, which is definitely an acqui-hire. And I looked at Review before I launched my Substack. And one of the problems I ran into was they had an article from 2018 talking about what you can do to kind of grow your audience and to retain your readers. And one of the recommendations was to offer an annual subscription, which I think is a fantastic idea. I mean, I've priced my product to drive annual because I want people who are actually going to get value from it. And I only think they'll get value from it is if they read what I'm saying over time about companies or the portfolio.
Agreed. Yep.
Well, that article from 2018, if you go to Review and set it up and try to offer annual subscriptions, they don't have them.
Shut up. No way.
So I sent them a message saying, hey, I agree with you guys. It's a fantastic idea, but you don't offer it. It's 2021. So can we do something but to your point, it's a very nascent offering. It's an acqui-hire, and they'll probably build these things over time, but it makes it hard for people who are looking at it now.
It does come full circle though, right? Because we mentioned Spotify, can someone kill them? And you said Apple did an interview and they didn't mention music once. And that's one of the reasons you think Spotify survives. Twitter, Jack Dorsey, he's double CEO, right? But when you go to Twitter, the first three things are not the first three things on their list are not killing Substack. There's other things that they're trying to tackle. So I think it's very similar. Substack is 100% focused on people like you and me who run subscription services and people like you and me who subscribe to subscription services. So I think that is their edge going forward. So I would not want to bet against them. I want to be cognizant of time, but we've talked about a lot on Spotify. I love this company. Is there anything you wish we had hit a little harder or any closing thoughts that you want to end leaving the listeners with?
I think it's an interesting tidbit that just ties into what you just said. So maybe I'll close with that. There was an interview with the CEO of Barstool Sports. I'm forgetting her name right now. But anyways, she talked about working with companies like Apple and Spotify, obviously, because they have a ton of podcasts. And I can't remember the exact context, but she essentially said, what is Apple doing? We're obviously, Barstool Sports is a big platform. We have podcasts that are being listened to. And she's like, I have no idea who works on the podcast team at Apple. And they may have improved things since then. This was probably 12, 18 months ago, who knows? But it gets to what you were just saying. And when you're a small part of a big company, maybe in certain situations, the incentives are set up properly and people are allowed to run with their vision to do what they need to do. But it seems like a lot of times it gets mucked because of its place inside this broader corporation that has its own mission and its own KPIs, et cetera. So we'll see what happens. But I think it's hard when you don't have, I think a quote from Satya Nadella's book is something along the lines of, when the strategy and mission of the people at the top of the company is off by an inch, by the time it gets down to people further in the organization, it's off by a mile. And I think that idea really rings true. So for someone like Apple to be even more competitive than they've been in the past with Spotify, even for iPhone users, let alone everybody else, but they'll need to really nail that. And I think it's hard to do, but we'll see. Fantastic.
Well, Alex, appreciate you coming on. Looking forward to having you on in the near future. Everyone should go check it. There will be a link in the show notes. Everyone should go check out the Science of Fitting Substack. I'm a subscriber. Really enjoyed the first. It's been less than a month at this point, I think, but I've really enjoyed the first few articles. As soon as that Spotify one hit my account, I was tweeting you. I was like, "Come on, you got to do it. This is the company we're talking about." So, appreciate it. We'll have you on going forward, and we'll talk soon.
Appreciate it. Thank you.